According to price action, when it comes to trend ranges, prices will oscillate between two important key levels, and despite the fact that the general public is trading the breakouts when it comes to trend ranges, you want to do the opposite because the price action rules tell us that most breakouts of trend ranges will fail. Now, trend ranges are quite a difficult pattern that a lot of traders struggle with, and in this video we're going to talk about how to approach and trade trend ranges properly. So we are looking at the trend range structure, and the first thing I need to do is I need to identify the extremes because prices will most likely pivot or at least show some reaction upon reaching the important key level, support at the bottom, resistance at the top. I also need to follow the trend line rule because there are trends even within the trend range. So I need to follow the trend line rule so I know if I'm supposed to be focusing on buying or selling. And in this particular case, we can see there's even a smaller trend range formed in the middle of the main one. And this is very difficult area to trade. This is basically a no trade zone. Generally, when you trade trend ranges, you want to be focusing on looking for setups at the extremes. And once the prices are in the middle of the trend range, and not only that, once they are so congested, you can see EMA in the middle of these bars, a lot of bars stacked right next to each other, no clear bias. You definitely want to be patient. It will be tempting to take setups both ways. And once it is tempting to buy or sell at the same time, you keep questioning yourself. That's a good sign that you're probably gambling. You don't want to be gamble and you want to wait for prices to break out and give you a clear bias. So avoid trading in the middle, especially if it's so congested. You can see prices broke the trend range, came back. Then we have a downtrend working lower. We have a break, new extreme, and notice prices are pushing back into the trend range, back above the support. So we cannot deny the fact that this big trend range has a small trend range form inside. And according to price action rules, most breakouts of trend ranges will fail. And this was the failed breakout to the upside, pull back lower, and it's the breakout to the downside, and market is working to the upside. Now you can see that we are also following the trend line rule because we have a downtrend, break and a new extreme, and only after there's a break and new extreme, prices, the momentum may switch. However, I don't want to buy just yet. Notice the congestion, a lot of bars stacked next to each other, but notice what is happening. We have a new low, we have a first attempt to sell, pull back, second entry short, and notice at two key entry points and right at the EMA. It's above the support and it's right above the exponential moving average. So this is a failed second entry short. The bias bearish played out, so we're no longer looking to sell. Once we pushed above EMA, the range rules are kicking in and the bias is most likely bullish because we're coming after failed breakout and we have a reversal pattern. And this is one of the safest ways how you want to identify that you want to buy or sell after failed breakout when you have a reversal pattern, and you're going to see this pattern a lot. So this right here is the first decent high probability setup. Now it is still quite slow. It is before the news, so market was really slow. But when it comes to context or pure price action, this is a great setup to take. Failed second entry short. And notice also if I'm going to connect the first two swings, this swing is going to get confirmed. So we have actually three key entry points, the key level, EMA, and this trend line. Great signal bar, and market continue working higher. Stop loss goes one tick below the signal bar, 8 tick target profit, scalp was made, uptrend created new extreme, another failed breakout, and notice prices are working lower. Can I go long here? I cannot. Even though most breakouts will fail, remember, we still need to follow the trend line rule. So I need to draw my downtrend like this, and only if we get a break and a new extreme, then I can continue thinking about breakout failing. So you can see you have a prices, and still you can see there was a still pull back into the trend range, but the momentum followed, and notice what is happening. We have a break, new extreme, which is telling us that the downtrend played out. We have a failed breakout, and we have high-low confirmation setup of the failed breakout. And this high-low is not only a confirmation setup of the failed breakout, it is also confirmation setup of a second entry long, because this is the highest high. We have a first entry long, pull back, second entry long. So we're confirming the second entry long and the failed breakout. Notice how far away the prices are away from the EMA, and the prior structure of the trend range was a healthy trend range, which means there was no imbalance prior. So chances are really high that the breakout will fail, and a lot of sellers, retail traders, they're trading the momentum, they're watching all the orders, sell orders being put into the market, and they're thinking, okay, the market is breaking, I gotta sell. But the smart traders are going to do the opposite, and price action rules will help us to stay away from this behavior because you want to take the other side of their orders, most breakouts will fail. This is the failed breakout, downtrend played out with the break new low, and this right here is a high-low confirmation setup of the failed breakout with the great tier 1 signal bar, a lot of room to get out, and this breakout is most likely going to fail. And here we have new low, first entry short, second entry short failure. A very similar setup to this setup right here, but there is a little difference because this setup for the most part is still below EMA. For this reason, if you want to take this setup, is definitely a little bit more aggressive, but this is one of those ways how you can capitalize on the momentum. Because if you're unsure if the breakout is going to fail, which it requires more experience, you want to wait for a reversal pattern, which in this case would be push above EMA and a failed second entry short. So this is very close to being a good reversal pattern, but it is still for the most part below EMA. If this form above would have been much better, and notice prices are trending to the upside. So I'm going to redraw the channel because remember, I always need to follow the trend line rule. Prices are working sideways. Okay, we have a potential second entry long. The signal bar, however, is doji and the downtrend is in play. Why am I looking for second entry long? Because this uptrend according to trend line rule is gonna get new extreme. Okay, still no great setup. Downtrend is in play. It is also two sideways. Look at all these bars stacked right next to each other. You're not touching the EMA with the body. I'm just waiting. Okay, and price is going to break and a new extreme for the downtrend. So there are trends, micro trends, even for the corrections. And we have first leg down, break, second leg down. So larger two leg pullback. Market likes to move in pairs of twos. This is why we're counting for second entries to work and fail. And this right here would be double trap, but still, you have no room to get out. It is still part of the congestion. Great signal bar, but it's just too big. Even though you expect new high, you cannot really take it safely. And market keeps working higher, and market created new extreme. First leg up, I'm gonna copy it. Second leg up, market likes to move in pairs of twos. Uptrend played out with the break in new extreme. And since so far this has been a very healthy trend range, I'm not really gonna draw particularly a wider uptrend. I'm gonna observe how the EMA is gonna react. If I'm not sure if there's a wider uptrend or not, I just need to observe the EMA, and EMA is not holding at all. So at first I would draw break at a new low, but notice what is happening. Prices are continuing selling off to the downside. So at this point, since I have a break new high, I need to redraw a wider downtrend because I'm expecting a possible bearish reversal. You have a break new high, we're in a healthy trend range, you have a new high formed, first entry long, pull back, no break above the bar's highs, and a first break here. So this is a second entry long failure. This right here is a failed second entry long. Can I take it? I cannot. It is at the very bottom. It triggered below bullish bar and it's far away from the EMA. So I cannot go short, even though this is a technical failed second entry long, but horrible bar, bullish bar, I need to sell below bearish bar and it's far away from the EMA. And notice what happened shortly after. You have the confirmation, let's say the continuation of the failed second entry long, and now the price is corrected a little bit longer, confirmed the EMA and confirmed the trend line. So this was a reversal pattern trap. They trap all the early sellers who are selling too aggressively below horrible bullish bar far away from EMA, and now the EMA got tested and even the trend line is getting confirmed. So you can treat this as a failed second entry long. It is more aggressive, but since it is showing such a great reaction of the trend line and of the EMA, you know that a lot of bulls must have gotten trapped here. The market continues working lower. Okay, we are bouncing at the support, but I'm following the trend line rule. I still expect new low for the downtrend. And notice the market is proving me otherwise. So in price action, you want to follow the trend line rule, but it is not uncommon for a market to sometimes not create new extreme when the prices will reach the important key level. The momentum here is so strong and a lot of buyers are jumping into the market that there's just not enough sellers for prices to create new extremes. So if you see this, you cannot no longer think about getting a new extreme. You just have to adapt. I'm going to redraw a brand new uptrend. We're retracing too much of the downtrend, so just adapt. This is not uncommon in trend ranges. In trend markets, 90% of the time you're going to get new extreme, but in ranging markets, it's completely common to sometimes just touch the important key level and just pivot quickly, the reverse, because there are a lot of buy orders here, resting limit orders, and a lot of sell orders at the top. Okay, we have a Trend line working to the upside. I don't want to sell just yet. Momentum is too bullish. I cannot go long just yet at the same time. I'm just waiting. We have a second entry long. Okay, and now we're pushing above EMA. We have a multiple matching highs, kind of like a congestion. Actually, when I was watching this live, I had a micro break and a new high here. So for this reason, I was being patient. I didn't really like selling because we don't have a reversal pattern, and I don't really want to go long because there's a micro break new high. Either way, a lot of stack area here. Nothing is clear, but finally you can see you have a first entry long, second entry long, and you're breaking above the EMA. So once again, the push above EMA is confirming the bullish bias, and I'm expecting to get a high-low confirmation setup of the second entry long. Can I get it? I cannot. Notice we have what you can treat potential as a high-low, but you already broke the latest high. So this is just technically first entry long. You always want to see high-low before it's going to break the prior high. So even though it worked here, you can't really take it because a lot of times it will save you being patient here once you already break the prior extreme. And once again, your mind should be focusing on what's happening here. I'm going to zoom back to remind you of the structure. Notice clear trend range. Another failed breakout. So what you're expecting according to trend range rules for market to continue working hard. It goes against common sense. Your brain will trick you into thinking the market is breaking. You're going to continue working hard because you always observe market trend to the upside, and your common sense is forcing you to take a look at the uptrend. We're going to break higher the same way how the market is breaking to the downside, and your common sense will force you into thinking the market will continue to the downside, but this is where the smart buyers will buy, and this is where the smart traders will sell. However, structure was a little bit too bullish. There's a lot of congestion here, nothing clear. And once the trend to the upside is so strong, you don't just want to fade the breakout just yet when it comes to medium ranges and smaller ranges only. And notice what you have. You have, once again, lower high confirmation of the failed breakout. Very similar setup to what we have at the bottom, and now we have at the top. So this right here is a lower high confirmation setup of the failed breakout. Great bearish bar, closing below EMA and closing back into this trend range. And also you can see the trend line is in play. As I'm watching this and I see second entry long forming, I'm expecting reversal pattern. Just like here, we had high low and a failed second entry short. We have lower high and I'm expecting failed second entry long. And notice we have a failed second entry long. New high, first entry long, second entry long failure. It is off the trend line. It is right at the EMA and close to EMA, so you don't have to chase it, and it is right below the important resistance. So this right here is the safest way how you can predict that the market momentum will shift. This was the actual setup I took because I can see we are in a trend range. We have a failed breakout, so I'm just thinking about selling. The lower high is more aggressive, and this is the safe confirmation. This is the ultimate trap. Second entry long, bulls got trapped. Bearish momentum is strong because the market will create breakout that is going to fail, and we're going to go back into a trend range. So you can see prices continue working to the downside. As we're breaking to the downside, you can see a lot of momentum. So I'm going to extend my bearish downtrend like this. Okay. I'm expecting a new low to be formed. We have a new low, first entry short, second entry short. Can I take it? No, it is below bullish bar. I need to sell below bearish bar either like this or like this. I cannot sell just yet. Another doji, I cannot sell. Another doji, so I'm just waiting. And also I can see that the prices are going sideways a lot. So I'm just going to respect the congestion. And market is breaking to the upside, so I need to adapt. I need to switch the bias. Something like this. Actually, something like this. We have potential overshoot. Micro double. Top resets the count. We have a first entry long, but I don't want to take it because we have a downtrend in play. Second entry long, but it's not touching the EMA with the body, and the downtrend is still in play. I can't go long just yet. Plus, we have potential overshoot, and there is not enough room to get out before these highs. And what about this downtrend? This downtrend didn't get new extreme, so you can see that you have a lot of conflicting beliefs here. You want to be taking a high probability setup where all things align, so you're confident, you have potential overshoot, there's a potential downtrend, maybe not enough room to these highs, and also what about this downtrend? Can get a new extreme, so just be patient, don't force setups, don't get tunnel vision. It's completely normal to be confused because there are a lot of things and variables to take into consideration. So just be patient. You want to really take a high probability setup when all the things align, all the price action rules. I cannot go long because horrible bar, and there's also inside bar, so I'm just waiting. Okay, we have a congestion. I definitely cannot go long now. Horrible congestion, no trade zone. Can't sell, congestion, and market is trading to the downside. Now, am I going to redraw downtrend like this? No, because this was the second leg for this first leg. So we have first leg down, break, second leg down. Market likes to move in pairs of twos, and we reached new extreme finally for this initial downtrend. So it took a little bit longer, but eventually the second leg was created. You're touching at the support. So once again, you're supposed to be shifting from bearish to bullish. Notice the price action rules are telling you, okay, you have a downtrend with the break new low, large two-legged pullback, and you're bouncing at the support. So there is no reason for you to think bearish. You're expecting bullish bounce. Buyers buying, especially when the measured move was reached. And this is why the strong momentum was generated like this. No great way for us to take it according to price action rules. And wow, this is extremely strong rally. Quite unexpected that you don't even have chance to go long. Okay, we have a second entry long. Uptrend is new high. Can I go long? I cannot. The downtrend is in play. The signal bar is bearish. This is too big. The scalp was already made. The downtrend is in play. And notice what is happening. Prices are breaking back. Now, we have another failed second entry long, but this time you're above EMA and the uptrend is still in play. There is no clear break at a new high. So there is definitely a chance the market will create new extreme. And once again, notice breakout above the trend range and prices continue working lower. In this case, since you don't have a break in new high and this is such a strong uptrend, you can't really sell safely, but still you can see the price action rules working. You don't want to be trading the breakouts, as most strategies will teach you on the internet. Focus on fading the breakout because most breakouts will fail. If this failed second entry long formed below EMA, would have been okay. You even have a lower high confirmation of the failed second entry long, but you're selling so far down. Take a look how far down you're selling, and you have larger two legs down. Your first leg here, pull back, second leg here. So you're really taking a little bit of gamble here. It worked here nicely, but it's hard to predict it when you're trading it live. So I'm going to redraw the downtrend. I'm expecting new low to be formed. So what am I expecting? Second entry short, two-legged pullback. Even get a second entry short. Downtrend is new low. We didn't get second entry short, only first entry short, not fully touching the EMA. And notice we made it all the way down to a failed breakout. And now you have high-low confirmation of the failed breakout. But this time, once again, I'm going to zoom back. Notice another failed breakout at the bottom. Now, once you keep getting so many failed breakouts, you can widen the trading range a little bit because the price action is giving you more information when the key level is going to reside. So this is not a bad high low to take, very similar to this one, but there's a little bit difference because we came from the very failed breakout at the top all the way down to the bottom without a single confirmation of the EMA and let alone break above EMA. A lot of times this can give us clues that the downtrend may be stronger. So, more aggressive trader can take a chance because once again, you're playing the trading rules, but you gotta be careful. I'm gonna redraw the uptrend. I have a small break, new extreme, so prices created new high. I can't really look to go long, and notice you have a big bearish bar rejection. I have a new low, first entry short, second entry short failure. Can I go long? Well, definitely not because the signal bar is bad, but it is even correct to be expecting to go long. Even though it looks like it is correct because you're bouncing off the support and this was quite a steep move up. Like I already mentioned, from the very failed breakout all the way down across the entire trend range, not a single confirmation of the EMA. This is a very strong bearish move. And this was such a long push after fell breakout. So once you have a break a new high, you're now expecting for prices to continue working lower, because in fact there can be a wider downtrend. It's a little bit more advanced, but you can use the behavior of trends inside of trend ranges. Once you see the broader and more sideways breaks and new extremes, this is where you generally can expect for market to pivot, because the trends are weak. But this was a very strong bearish momentum. And notice what you have: new low, first entry short, second entry short, failure, and you have lower high, confirmation of the second entry short. And a lot of bulls who are buying too quickly got trapped. When I was watching this live, I actually had a doji bar, but now this bar is looking really nice, and this is a lower high confirmation setup of the second entry short. And you know that a lot of bulls got trapped because we already have a break new high, so you're no longer looking to go long. Look at this big bearish bar telling you something is wrong, combined with this massive bearish push down. You're also expecting filled second entry long, new high, first entry long, pullback, second entry long. Can you get a failure? You cannot. The market already continue working low. You have a filled second entry long here, and it's already a little bit too late. When I was watching this live, I had my support here. I hadn't really made it wider at this point, so I didn't really like selling directly into the bottom, and I wanted to see it close to this congestion. But if you already have it a little bit wider, you have a first entry long, second entry long failure, you know, I can see why someone would go short here. I can mark it. You know, I don't really like it because you're expecting filled second entry long to form here, to trigger here, to trap everybody going long here. While the prices are at the EMA, not that many bulls are going to go long here. It's also quite in the middle of no man's land. It is close to the EMA, but like I said, it was close to support. But if you already extended the channel, the trend range at this point, I can see why you would sell. And notice you would have gotten stopped out, only to see it go on a second entry short where you thought it was going to go. So if you took this short, nothing you can do. It's part of trading. Sometimes you just cannot time it perfectly. Just a little fake out, and market continued working to the downside. Okay, new extreme was formed, so I'm going to mark it. And notice, and this is interesting, despite the fact that we have a break in new extreme, I can see how nicely prices are creating consistent lower highs and lower lows. There is a chance for me to draw spike and a channel, something like this, and this is also quite advanced. But since I have so many confirmations here, I can potentially consider going short here. It is definitely more advanced. If you're not sure, you just are supposed to be respecting the break and new extreme. But more astute student can see that we have EMA aligned with the trend line and so many confirmations. Decent second entry short to take a chance, because you're at the 3 key entry points. The support is acting as a resistance, and market keeps working to the downside. Okay, you can't take anything now, even though you're confirming this channel, because it's only first entry short. You can't take first entry short here. You have a first entry short, second entry short, but it's far away from EMA, so it needs to form at the key entry point. New low, first entry short. You're not interested. But more importantly, this downtrend had the break in new extreme, so you want to be careful. This was just a supportive pattern that I'm drawing. Okay, and prices are working to the upside, so I'm going to redraw the wider bullish channel. I have a new high, first entry long, pullback, second entry long, but you're not fully at the EMA. The downtrend also fully doesn't have a break in new extreme just yet. This uptrend is not fully confirmed. It doesn't fit that well. It feels a little bit more aggressive. It worked, but feels a little bit more aggressive. Okay, prices continue working higher. I have a break in new extreme. Can I go long as we are below EMA? And pretty much nothing is forming. We can't get even a second entry short failure or high low, and now it's already too late. You can see that eventually another breakout fell and prices managed to go back into trend range. So I hope that after today's lesson, you are more aware what to look for when you are trading ranging markets. The safest way for you to predict that the breakout is failing is for you to wait the failed second entry short here when you're buying after failed breakout, or the failed second entry long when you're selling after failed breakout. There was another failed second entry long here. Notice once again generating momentum all the way down. You can see the difference in structures. This was such a different move down, so steep and so strong. It's completely different than all this choppy and wide price action at the very beginning. So this is why the momentum was a little bit more bearish, and you definitely don't want to be fading the breakout now because it's just more bearish and too consistent. So good luck with your trading. I'm going to talk to you next time.